Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. Okay, it is still of great comfort to me, even after the falls, rises, and now the recent falls once again, that this market still keeps within the broken May to October 2020 bullish shift pitchfork. That was originally drawn, well, now over a year ago. To recap some of the recent significant actions since late September, prices had halted a decline all the way down to the lower time, currently at 21.52 of the broken May to October 2020 bullish shift pitchfork, where they were halted to a great degree by the combination of that lower time, also the slowly rising long moving average, currently 22.03, and the big 50% Fibonacci line of the March to August move at 21.60, plus the February 2018 to March 2020 move at 21.28. Now the market consolidated and in early October started to rise back up again through the middle time, currently at 23.22, and all the way up to the upper time, currently 24.92, where it peaked 5 weeks ago, caught in some congestion between 24.43 and 24.49, as well as the upper time. This was the peak and finish of the oft previously mentioned diving board pattern, and I won't go into that anymore. Since then we've had a topping action. Initially it was within a small bear channel that petered out last week. The reason for the petering out was the combination of solid looking support of the very slowly rising long moving average, currently 22.03, and the key 50% Fibonacci line of the June to October 2018 move at 22.21. Now don't get me wrong, the 50% Fibonacci line at 22.21 is a legitimate support and a good one. However, how strong would you imagine it would have been without the help of that nearby rising, slowly rising, long moving average that's just below? This halt led to the bullish 3-day bullish, well, it led to the 3-day bullish morning star pattern made 2 weekends ago, and a halt to the long tail drop of the indecisive spinning top made last Friday, and even to the possible double bottom formed over the last 2 weeks. Now the short medium moving average, currently 22.73, and the overhead and superior looking medium moving average, currently 22.90, along with the rising middle time, currently 23.22, have all, despite being pierced yesterday and today, capped the rise, at least on a closing basis. Now you may think this cap would be enough, but I would remind you of one key feature already mentioned often enough. It is not the very recent possible double bottom, but the broken May to October 2020 bullish shift pitchfork is still a bullish shift pitchfork, and until that is truly destroyed, then it will guide this market higher. Right now it seems we are going through a very indecisive phase, with some wide ranges, as can be seen by the 3 large indecisive spinning tops formed over the last 5 sessions. I'm actually, of course, not even counting today's action. LME 3-month tin. I'm sorry if you've heard this first bit before, but it is necessary, I'm afraid. So here goes, once again. So I've been repeating this here again and again for months and months now. The overall bullish incentive is still alive and well and strong here. This was and is because of the original move up within the January to March bullish shift pitchfork, which had started back in March and then translated to a higher level in April, resulting in prices moving up over the middle time, currently 37.855, of the January to March bullish shift pitchfork. Prices managed to reach up and are over the upper time above, currently at 42.40 on occasion, back in July, August, mid-October, and as recently as the last 2 weeks. Yet in all that time, the market has always come back within the folds of the bullish pitchfork, as it did late 2 weeks ago and late last week. In all the time since March, this bullish pitchfork had and still has driven prices higher. Now, admittedly, and I'm sure you as well will believe, that no market can head in one direction all of the time, forever, this metal is giving a pretty good impression of such a market. This is why we saw major corrections back in August, in late September, and most recently late October. It is important to note that despite these corrections, the market in all its pullbacks down has never managed to break the same bullish incentive that's been here since March. The evidence for this can be seen by how this market is still today well within the bullish shift pitchfork, currently in between the middle time below, that's currently at 37,855, and the upper time above, currently at 42,240. Another point to note, and this may become very important, is if the lower time, currently at 35,475, is challenged, then one should take into account that this lower time has been married to its long-term partner, the rising medium moving average, currently at 35,470, since at least August. It may well be that if we see a separation of these two between the lower time and the medium moving average, then, perhaps, only then, may we start looking at the bullish incentive as maybe being finishing. This is no more than a conjecture on my part at this time, but it does have a certain symmetry to it. So I suggest special attention to those two. This brings me once again to my final point, the same final point which I have repeated from previous commentaries, and it is this, and I quote, "It can be hellish to rely on only one pattern because it can be hellish when it breaks," end of quote. So that's it. That is where we are now, once again. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.